Hey everybody, what's going on? It is James here, and I have a crypto slash Bitcoin market update for November the 2nd, 2021. And I'm also going to teach you a little trade lesson that you can use. It's an evergreen lesson so that you can use it for the rest of your lives. Before I jump into the content for the video, a couple things. Number one, if there's a little bit of a buzzing sound, I apologize. One of my PCs in the background, I have it mining again, and I usually turn it off to do videos, but I just didn't feel like it, so you'll have to deal with the buzz. Sorry. Second of all, if you like the video, make sure to give it a thumbs up, make sure to subscribe to the channel, and make sure to leave me a comment. I took most of October off. We had a death in the family. My father-in-law passed away unexpectedly, and so I just decided to take the month off, right? Spend time with family and make sure my wife was doing good. And my parents passed away in their 40s, so my daughter only had one grandparent, well, one grandfather, sorry. Her grandmother and my wife's side is still alive. But so it was obviously a bummer for her, and just wanted to spend time with the family. So I kind of reevaluated what I was doing with my time and life, and one of the things I decided was if I'm going to do content, don't make it a hobby, actually do something with it. So in order to grow this channel, I need you to be active. I need you to, make sure to hit that thumbs up, make sure to subscribe to the channel, and make sure to leave a comment. It's really important that you do so. The more comments I get, the more videos I'm going to do. All right, so the first thing I want to talk about is market update. I just want to kind of make this short, sweet, and to the point. There are cracks starting to show in these markets. Take that and do whatever you want with it, right? We see things like Shiba. Shiba's obviously pumped. It's up big. It's up, I think, 13x or so from a couple of months ago. But one of the things that people aren't aware of, or at least most people, the average hold time for Shiba on Coinbase was 13 days. It's actually down to 11 days now, but I couldn't find that article. Which means that people are not investing in Shiba. People are playing hot potato, right? Hot potato, hot potato. Is there somebody that's willing to pay more for this than what I'm willing to buy it for? It's a speculative game. It's the mania that accompanies a market bubble. So keep that in mind. When people are only holding assets for 11, 12, 13 days, it's hot potato. And it's all fun and games until you're the one that gets left holding that hot potato. So keep that in mind. Also, we're seeing things like Zillow. Little bit of a problem with Zillow, right? Come to find out, after their stock dumped yesterday, this page says 1 hour ago, but it's from yesterday, just didn't get time to shoot the video. Right, Zillow stock dives after analyst highlights 2/3 of the homes bought are now underwater. Zillow is selling 93% of Phoenix homes for less than it paid for them. Zillow is selling 64% of homes in its top 5 markets for less than it paid for them. Ooh, not good, right? And then we come to this article. Robinhood is hoping to lure back retail investors. First off, I find this hilarious that they use the word investor, because Robinhood does not cater to investors. Robinhood caters to casino players. They don't provide you a bunch of training teaching you how to trade like some of the other platforms do. No. They just, boom, download our app and off you go. Hello and welcome to the casino. They're having a bit of a problem now. Their stock's down more than 10% because, you ready for it? Crypto trading is down 78%. And anybody who knows anything realizes that rising prices with falling volume is a huge red flag. So now they're going to give away some dough. Crypto is fun. It's also deeply technical, says Christine Brown, Robinhood Crypto COO. Oh yeah, crypto's fun, all right. It's fun when it's in a parabolic market and everybody's getting paid. Whole lot less fun for the people that invest in something and then watch it go down 95%. So that's around the corner. So, again, it doesn't mean that the market's going to dump this week or today or even this month for that matter. But these are big red flags, and you should definitely be aware of them, okay? As far as the bigger market picture, this is the SPX versus the GDP. This is kind of the Warren Buffett indicator, if you will. And this was the .com bubble back here, reached, epic levels and then fell 70% versus GDP, and we are well past that level now. So we'll see. We'll see what happens there. As far as Bitcoin goes, one thing I would say about Bitcoin, I still find that it's personally in a range. That's how I view this, just one big range going back to December of last year. And right now, I'm fairly neutral on it. I do think the bubble's going to pop. I do think that we're in for some seriously drastic, corrections, crashes, whatever you want to call them. But there's not enough information right here to say that it's due. In fact, this just tested the top of the range and now it's trying to move back toward it again. So if anything, I would say it's stronger than weak. You look at a monthly candle, this is the biggest candle in Bitcoin history from open and close, right? It's like $17,500. So it's very hard to say, well, we just had the biggest candle ever. I think I'll be bearish. Pretty neutral. I'd say wary is the word, right? Maybe not neutral, maybe wary. And I still have some crypto, probably more than I should if I'm being totally honest. But it's all profits, so I'm being a little bit looser with it than what I would if it was, money that I had invested out of my pocket. I'm skeptical that it's going to move immediately down from here because I know that historically Bitcoin, at the ends of their bubble, at the end of its bubbles in 2013, November it moved up almost 500% in November of 2013, and at the end of the 2017 bubble in November and December it moved up almost 300% if I remember right. So I'm a little skeptical to get out here with the rest of what I have when I feel like there's an opportunity that Bitcoin could go up further from here, maybe even double. And if it does double, then we may see a lot of these altcoins pop, and maybe some of these older altcoins would finally return to their old all-time highs. So that's kind of what I'm waiting for, because if the altcoins that I'm holding were to just simply go back to where they were, right, not even new highs, just back to where they were, it would be a really, really big payday for me. So I feel like the reward potential justifies the risk, especially considering it is all profits at this point. So that's kind of how I feel about that. Now, let's jump into the trade lesson, the evergreen part of this video that's good forever and that you can use for the rest of your life. Ready? Tesla. How many of you have kept an eye on Tesla and realized what's going on? Anybody? Well, Tesla, my friends, is in an epic, should we call it a bubble? I don't know. Uptrend, whatever you want to call it. Tesla is now up 3,300% from June of 2019. From the open in June of 2019 until now, Bitcoin is up 645%, meaning that Tesla has outperformed Bitcoin by 5-1. Now, the first thing I'm going to say is this helps to illustrate the fact that Bitcoin is not a once-in-a-lifetime opportunity. It was at one point if you got in early enough, but now it's just another tech stock, right? But number two, June is when I was bearish on Bitcoin, calling for the pullback, and it makes for a really good example of, how you can play this differently than what mainstream media will lead you to believe. So mainstream media basically makes it seem like, hey, you're either in an asset or you're in cash. Cash is trash. About the only time you really want to be sitting in cash is if you believe the market as a whole is about to pull back or crash and there's imminent signs of danger. Then it makes sense to move to cash, right? But in the summer of 2019, the stock market did not look like it was about to crash. If we go look at the QQQ, which is the ETF for the NASDAQ, and we go back to the summer of 2019, it didn't look like it was about to crash, right? This was May right here, so it had just put in a new high. This could simply be a pullback, right? It just had this big correction in December of 2018 where it corrected about 23% and then put in a new high. So there wasn't like a big technical reason to be looking for, a move to cash back here. So what could you have done differently if you wanted to get out of Bitcoin because you thought Bitcoin was going to pull back? Well, instead of moving to cash, you could just move to another asset. Move your money to another asset that you think is going to outperform whatever it is you're cashing out of. For example, what we can do, if you want to measure something versus another asset, Tesla, for example, simply type in the ticker, so Tesla divided by whatever you're measuring it against. In this case, Bitcoin. So Bitcoin USD on Coinbase. Now this chart is actually a chart of Tesla, but instead of measuring it in US dollars, it measures it in Bitcoin value. Well, watch this. Big downtrend, right? Pulls back 99% versus Bitcoin. And then what does it do? Perfect double bottom. See it? When is this? This is June of 2019. So a person could have moved from Bitcoin to Tesla back here. And if they played it perfect, which nobody would, if they got the absolute bottom and sold at the absolute top here, it pumped 1,200%. Meaning if you had one Bitcoin, which in June of 2019 was worth about 13 grand, and you sold that one Bitcoin, took that 13 grand and put it into Tesla, you could have then moved back to Bitcoin over here and bought 13 Bitcoin with that money, which of course right now would be worth around 800,000 or so. If you just moved to cash on Bitcoin and took your 13,000 and then bought it, at the bottom in March of 2020, you could have bought back about 3 Bitcoin and you'd be up huge. You'd be up, about 180 grand or whatever right now. But if you moved to Tesla instead and cashed out at the top, you'd be up, 800 grand if you played it just perfect. If you were still holding that Tesla, if you'd never moved back to Bitcoin, right now you'd still be up about 457% versus Bitcoin. Meaning your 1 Bitcoin that you put in back here would be worth about 5.5 Bitcoin over here. Meaning, of course, over $300,000. And the point is not to say that you could have caught this perfect, because again, this is, in hindsight, it's a double bottom, but at the time you would have known it was a double bottom, right? There would have been other things to consider. The point of this video, and I'm just using Tesla because it's on everybody's mind right now. The point of this video is you don't have to trade an asset versus cash. You could easily trade, for example, Bitcoin versus gold, right? This is how much Bitcoin is worth in gold. So right now, one Bitcoin is worth about 35.67 ounces of gold. And you could just move back and forth between gold and Bitcoin. For example, this was a big range. This is an old chart. I put this on here probably a year ago, right? This was a range. It broke out right there. So if you were sitting in gold, you could have moved your gold investment over to Bitcoin. Right now, you'd be up about 221%. We all know that cash is inflationary, meaning that it loses value. It's historically always lost value. It always will lose value because that's just the nature of cash. So, when you hear things like cash is trash, that's what people are referring to. If you're simply sitting in cash, you're losing money every single year to inflation. So if you don't want to move your investments over to cash, and you don't want to take it and invest in business assets or real estate and things like that, you can just move between investments, whether it's, crypto to stocks, or stocks to crypto, or stocks to different stocks, or crypto to different crypto. For example, let's say that you were a huge Ethereum believer, you had a bunch of Ethereum, and you also really liked XRP. Okay, you can chart that, Ethereum versus XRP. So if you're in Ethereum back here, maybe you sell it. Up here, you get a ton of Ripple, and then when it comes way down here, maybe you take that Ripple and you convert it back over to XRP on the bottom of this range down here, and maybe you ride that up, and now you're up, 1,300% from there. You see what I'm saying? You don't have to trade versus US dollars. You would sell over here, you would simply move your Ethereum to Ripple, and then down here, you would move that Ripple back to Ethereum, and then you'd be up huge. And you may not be familiar with this, but I bet you'd be more familiar with it if I put it in terms you understood, like this, Litecoin versus Bitcoin. It's the exact same thing. It's just built into trading views, so you don't have to do the division. This is the same thing. This is measuring Litecoin versus Bitcoin. It's the same thing as if I typed this, right? Same thing. Litecoin versus US dollars divided by Bitcoin versus US dollars. Same chart. You're going to get the 3 peaks here and then down. Litecoin, Bitcoin. There's your 3 peaks. Boom, 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 and down, right? So this was LTC, BTC. LTC, USD divided by BTC, USD. Same chart. So that's really what I wanted to show you guys. Again, it's something important to understand, because I know a lot of people's problem is, James, I don't want to cash out. I don't want to move to cash because I'm worried about inflation. I'm worried about hyperinflation. I don't want to be sitting on a bunch of cash and it suddenly becomes worthless. I understand. I totally understand. So just keep in mind that you can move between assets. There's always the Forex market. If you're really worried about your currency, for example, if you're in the US and you're worried about the US dollar collapsing, you could always consider looking into Forex, which is literally what it's for. The Japanese yen historically has been considered a store of value versus the US dollar. It just kind of moves sideways. I mean, it's a pretty big range, huge range really, but this is what I always heard, was it was a store of value. So maybe you move your US dollars and you long the yen, right? If you're worried about the US dollar collapsing. If you're a big believer in China's currency, same thing. Here's a chart of the US dollar versus, I believe it's the Yuan, Chinese Yuan, right? So if you think the Chinese Yuan is going to outperform the dollar, if you think China is going to be the dominant, force, you could short the dollar versus the Yuan, or you could long the Yuan versus the dollar. So there are ways to hedge your US dollars or your British pounds or whatever currency your native currency is. Keep that in mind. But you don't ever have to just sit in fiat. Just sitting in fiat most of the time is a horrible idea. Again, if the market were to crash, that's a different story. Maybe you want to be sitting in mostly fiat. Or maybe you want to be sitting in something like gold. I mean, gold, it's high. It's almost $1,800 an ounce. So some people are like, man, it was like $1,000 a few years ago. It was $1,000 a few years ago. But keep in mind, it's actually sitting at the same levels it was in 2011. So gold is basically where it was 10 years ago. So is it overbought? I don't know. That's kind of tough to say, right? It's tough to say that gold is overvalued right now. It may actually be a case of where gold is undervalued, right? This may end up being a bull flag. We don't know, and we don't know until it plays out, which is, of course, the shitty thing about the way markets work. But at the end of the day, this is why a lot of, professionals will say try to be diversified, have a diversified portfolio, have some money in precious metals, have some money in, this, have some money in that. And most of them don't talk about having money in crypto, but even when I was bearish on crypto, right? Even when I was, really skeptical of crypto and worried that, Bitcoin was going to go all the way to $1,000, I always openly admitted that I had a long-term crypto portfolio. And that play paid off in a huge way. So with all that being said, I'm going to go ahead and wrap the video up there. Please remember, I am just some guy sitting in a spare bedroom. So obviously nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, or the Forex markets. Also remember, right now, stop and leave me a comment if you have not already. It's extremely important that you do that. The more comments I get, the more videos I will do. If you're not sure what to say, you can say, hey, I appreciate the video, or even better, you can let me know what videos you want me to create. If you have something that you have a question about, if you have something about markets that you'd like me to cover, I'd be happy to do so. If it's something I don't know, I'll tell you I don't know. But if it's something I do know, I'd be happy to knock out a video for you. And with all that being said, I'll sign off. This is James with Crypto Common Sense, reminding you to please trade safe.